last speaker for the evening is Alex Povolotski. He's the founder of AAA Coin blockchain cryptocurrency. Alex is a master of payment processing, creator, and market maker for AAA Coin, and he's a senior project manager for a San Francisco-based software development firm. He will be discussing sustainability of cryptocurrency, chances of replacing existing money, and danger signs.
Yes, well, thank you for introduction, everyone. I'm going to be very, very brief, very practical. I'm going to spend 30 seconds in reintroducing myself, then 9 minutes, hopefully, going through the little deck that I prepared for you, and then have 4 or 5 minutes or more for Q&A if you wish to share your questions. So again, Alex, I come from the FI world, so from financial institutions, worked with RBC, World Bank, JP Morgan, Chase, Moneris, other banks. Right now I'm on the software side doing some payment projects for Visa. And a small disclosure, this presentation is in the opinions of myself only, nothing to do with the above-mentioned companies, existing or former employers of mine. So that's all intro. I'm going to jump into the presentation now. If I can figure out the buttons here, first time with this shtick. Yeah, so what I'm going to present today is the sustainability of blockchain, and if cryptocurrency is going to replace, the currency. So I'm going to answer these 2 questions right now, and then go into details why. So the sustainability, yes, in niche markets, blockchain is going to continue. If it's going to, cryptocurrency are going to replace the existing currency, not going to happen. So why? So to have a currency, you got to have liquidity, you got to have acceptance, you got to have convenience, you got to have regulation. So liquidity means that it must be convertible to goods and services that you got to pay with. Acceptance meaning there must be a market for it, an exchange. Convenience must be convenient to spend, like your credit card or cash that you hold in your pocket, and the regulations, it must be legal to do so as well. So, limited Yes, limited scalability. Just keep a slide here. So why the cryptocurrency is not going to replace the currencies of today? Because it has limitations. Everything has limitations in life, but blockchain has specific limitations, and I'm going to be very practical about it and share my experience with it. So every node that confirms the transaction must verify a transaction that's going through, and this limits the total number of blockchains that it can process. So currently I'm going to share some statistics. So I'm going to take Bitcoin as an example because it's rather widespread compared to other alternative coins. So currently Bitcoin can process their blockchain 7 transactions a second maximum. So it has a limit on it unless they upgrade it or move it to another system. That's the physical limitation that it has. Other technology, IBM, Hyperledger, for example, Hyperledger Fabric, that it can process 10,000 transactions a second. So just to give you an idea. By the way, the blockchain technology is nothing new. IBM has had a white paper on it back in the 80s. So Satoshi created this Bitcoin application of blockchain, but in fact, it is well known in the IBM world. It has been documented well way before that mysterious Satoshi person. So anyway, the IBM Hyperledger has the multiple of transactions per second, but it doesn't even come close to the Visa transactions, for example, that averages 2,000 transactions currently a second and has a capacity of reaching 56,000 with the existing network that they have, and they're growing exponentially as well. So if they come even close to this, they can expand exponentially as well. They invest heavily. So coming back to the usability, so your credit card transaction that you use on a daily basis has just a few second response time, and all the users can jump in on the network and start processing, tapping their credit cards away. You cannot do the same with the Bitcoin. That's why it has a limited use as far as I see it, besides other factors. So just to give you some stats on the average confirmation time, this is for March or May, I think it's probably March. Data for March. So this is in minutes. Sorry for the quality of this, but this is in double-digit minutes. The confirmation of it. Again, I'm using Bitcoin transaction, so it ranges from minutes to double-digit minutes. The confirmation of each transaction. So if you were to use a Bitcoin as a currency today, you can trust that the customer paid you money as if you're the merchant, or you can wait 30, 40, 60 minutes until the transaction Bitcoin is confirmed and hits your wallet. So it's not very convenient from that perspective. Compare it with the Visa, MasterCard, American Express, what have you, any card brand that you make. It's in its network, it is milliseconds. As a user, you see standing in front of the point of sale device, it is single-digit seconds, the checkout time. So it's a significant difference you see right there. Privacy, or as my British colleague would say, privacy. Yeah, so everybody says that, or claims that the blockchain is secure, it's unbreakable, and so on and so forth. So it has certain truths to that, but the transactions appear private, that they're not tied into personal ID. However, there are multiple ways to track an individual down using a Bitcoin as a payment method. There are transactional patterns and algorithms that can be observed, and it's possible to link your identity to the address. The NSA using algorithms to track down people on the dark web, for example, doing the human trafficking, paying for RPGs and stuff like that. So there are ways to do it. So if you want to be obscure, use Monero or other more secure than Bitcoin methods, and use unique address, wallet address every time you use the transaction, and try to avoid your computer being seized. There are a couple of hackers that were transacting on the dark web and thought they were anonymous unless FBI kicked their door out and seized their laptop, which contained all the wallets, addresses that they were using to purchase arms, drugs, and whatever illegal services and products that they were using. So privacy is there if you know how to approach it properly. Storage constraints. That's another constraint of the blockchain. So every node stores a full copy of the blockchain. So the blockchain, as my first colleague presenter was sharing with you, it adds up. Every transaction is added to the block, and the blocks are added to the chain. So it becomes very, very heavy, and every server or node has a copy, an exact carbon copy of the same. So since 2000 and whatever year Bitcoin started, it has been accumulating links. So it's a very long train. You add on the train cars to it, and they're very heavy. Now, so the data storage imposes a huge cost to the centralized network, where every full node has stored more and more data. To give you an idea, Ethereum, another cryptocurrency that is popular, is growing at a rate of about 55 gigabytes a year right now, and that is exponential. So it grows with its use and popularity. So today it's 55 gigs, tomorrow it's the double, and geometric progression, you can almost say. So technology doesn't stay in one place as well, so that helps to alleviate that. But we're reaching certain limitations on the hard drives and storage facilities as well, where other than that, their quantum rules break the nano sizes that they're working with. So, unavoidable security flaws. So there is a topic there, again, feeding off the security of the blockchain. So the known flaws of Bitcoin and other blockchains that use the proof of work method, which is mining, known as in the common media, is the 51% attack. It was foreseen in the white paper of Satoshi Nakamoto. He says that when one particular mining pool or one miner reaches 51% of ownership of the coin, they will be able to modify it and confirm it being 51%. All the other network will accept it as being true, and they can modify transactions at will. So some people say, some people monitor very closely in terms of that 51%, so that no one miner reaches close to 50%. But what we forget sometimes that people collude together, and two mining farms or three mining operators will come together, each at 25% or what have you, and reach that 51% attack level, which is currently becoming a problem for Bitcoin specifically. Lost unconfirmed transaction is another potential security flaw where every day there's a number of, and I got a chart on that later on, everyday transactions are lost, partly because people send them to the wrong address, so that's just simple foolishness and lack of attention, but some of it is because the transactions are not prioritized in the Bitcoin blockchain network due to the low fees. So the fees are such, so for now it makes more sense to mine. In the future, they say when the complexity, with each subsequent Bitcoin being mined, the complexity of this cryptographic puzzle becomes more and more difficult, so it requires more and more computing power to do so, more hydropower to do so, and so on and so forth. So it becomes not feasible to do so at a certain point, and depending on the price of the Bitcoin as well. Now it dipped to what, 5,000-6,000 Canadian, compared to 20 that it was not so long ago. So there's a risk that the miners would not prioritize, or the big mining pools would put the transactions in low priority or not process them at all because of the low processing fees. They can simply forget it, dump your transaction, or it will be in perpetual limbo. It will not be processed, and that's happening every day. So I've got a couple of other here that are written by hand that are not on this presentation. So another flaw is that, for example, take Visa. They got a 100% guarantee to refund your money, right? So when you buy a service, or again, on the same topic of replacing currency, if you buy a service or a product with a Bitcoin, or somebody steals it from you, what is the recourse? The recourse is zero right now because there's no central body that you can go and complain to and get your money back. With the Visa, MasterCard, Amex network, they got 100% guarantee to the customer that your money will be returned if your card is getting stolen, or if somebody double charges you, or if you lost your money, if you bought a product and it never arrives. So there's 100% guarantee of that, not with Bitcoin, because of no central body to complain or to complain about. So transaction fees I talked about, so I'll go to the next slide. The biggest mining pools right now, I talked about this 51% attack, where if certain mining pools or a conglomerate of them reaches 51%, they can alter data pretty much and do whatever they want with the network, and the rest of the network will follow suit. That is, I don't remember what year it was, but I think last year, 2017 data. Again, this is very rough because this statistics is not officially available. This is just an assessment of it based on IP addresses and what have you. So China has 85% of the mining pool organizations. They do it there based mostly on the availability of cheap power, as well as the lacks in regulation. Although China tries to regulate a lot of things, but under the table, the things are looking quite different. And then there are just single-digit as you see Iceland, Japan, and so on and so forth. So China having 81% of the mining pools, if a couple of people come together and collude, there is your 51% attack right there. This is the chart that I promised you about the loss of transactions. This is like on a daily basis, the number of transactions. This is not the amount of Bitcoin, it's just number of transactions that are being lost. Actually, I should correct myself. These are not lost, they're in limbo. It could be delayed for days or months or until the particular miner has nothing else to do. So they prioritize, miners prioritize transaction based on the fees. So the highest fee transaction goes first. The lowest fees transactions go last if they go at all. So if you don't pay them enough, your transaction may not even reach its destination. So there's no guarantee on the transaction, the Bitcoin transaction reaching your destination. Regulation, yeah, it's another biggie. It's unknown right now. So it's a soup. It's a soup of everything. I got data from 2010, but since then a lot of things changed. Every month now things change. So just last year it was wild west for the blockchain, the mining, the ICOs. There are Ponzi schemes left and right. ICOs being popping up, collecting money and going under in no time. So regulation, the individual countries take the opportunity to take a stand, starting from last year and this year. So you see a lot of change in terms of the stand. The benefit of this is that individual citizens and investors can feel more secure. The downside to this is that you see more control, and it's going to become harder to create your own cryptocurrency exchange. For example, to list your coin, to create an ICO, you have to dive into a lot of paperwork and regulation. So right now the countries that are hostile to cryptocurrency, officially China, although China is also regulating its own currency very heavily in terms of exit regulations as well, export of currency regulation. But under the table things are happening quite differently. Vietnam, South Korea is a question mark here because they are amending their regulation as we speak. So they took a harder stance on the cryptocurrency exchanges. In North Korea, they treat all cryptocurrency now not as a currency but as a stock. So that presents some danger, but they're amending it. Brazil is negative as well. There are some crypto input controls, color-coded map that you want to ponder on. Again, this data is very old, July 2010, so it's not even real anymore. But I wanted to put it there just because it's colorful and beautiful. Again, that's a soup of mishmash. Things are changing every month, so whatever you see there is gone. It's changed. So this is import controls, export controls of currencies, domestic crypto controls. So some countries are beginning to take a stance on this. So that's the last slide of the presentation before I get into the Q&A. I want it to be more interactive, so I'm going to be really brief on this one. So the long-term trends, again, my opinion on this is such: wide acceptance of blockchain technology as a distributed ledger in niche markets. So what it means is the blockchain, so the Bitcoin may not be necessarily used as a payment medium because it's slow and cumbersome. But the blockchain itself, the undermining technology behind Bitcoin, is already used and investigated and invested into by the big banks. They want to simplify and speed up international money transfers as well as smart contracts, as one of my previous presenters have said, to speed up the process of registering a stock on whose account it is. And instead of SWIFT international transfers, some banks are looking into utilizing blockchain. Niche use of cryptos. So there will be still niche use of cryptocurrency as a currency, not in mainstream, but mostly on the dark web. So Dream Market, Silk Road, Tochka, Wall Street markets are the popular markets after the Bay was shut down, and a couple of others by the FBI. So there will be, because it's just secure, and people who know how to use the cryptos such as Monero, they can get under the surface. Elimination of Ponzi schemes. So regulation will definitely on ICO specifically will limit its numbers, as well as people getting away with it easily. Have regulation of ICO, that's what I just said. And greater government control and taxation of cryptos. So no government would want to some decentralized autonomous organization of DAO coming in and saying, look, we're going to replace your dollar, we're going to replace your RMB, we're going to replace your other currency, ruble, whatever. They're going to tax it, they're going to control the exchanges. So that's what we're going to see in the foreseeable future, 5 years at least. That's it. So I'll open up to Q&A. When you ask a question, please speak up because so that people in the back can hear. I will repeat your question too for everybody to hear. And please proceed. Any questions? Going once? Going twice?
And also in your first letter on sustainability. One of the things I saw you were listing there is about more transparency, because I think that's one of the challenges to adoption as well.
Blockchain itself is very transparent. Now everybody's saying it's private, it's secure. To a certain degree from the personal perspective, like who's behind this transaction, it is secure and private to a certain degree. But in terms of transparency, blockchain itself is very transparent because a copy of the whole ledger, meaning debit, credit, who sent transaction to what, from what address to what address, from what wallet to what account to what wallet, is available to everyone. The copies of this are on all the nodes, meaning all the servers, and are available through Blockchain Explorer to see and ponder for everybody. So it is as transparent as it gets. So from that perspective, blockchain technology is sustainable. Banks are looking into this. Medical, for logistical purposes, for medical purposes, medical records, it's very transparent, not from the personal point of view, but from a transactional point of view. You see transactions going on. You don't know who they belong to unless you dig into it a little bit deeper, but it's very transparent. Like
what about the transparency of the fair market value then?
Say it again, sorry?
So transaction-wise, I can see it's transparent, but in terms of, let's say you're trading it as a currency, how would you determine the transparency of the fair market value of a Bitcoin?
Yeah, the fair market value of the Bitcoin. Like any fair market, so the question is what the fair market value of the Bitcoin and its transparency. Like any fair market value, the key word here from my understanding is market. So market determines the value, what people are willing to pay for it, that's eventually what it's worth. It's worth nothing more than what you're willing, or me, or people are sitting here at some exchange to pay for it. There's no gold standard behind Bitcoin. There's no grain reserves or oil reserves behind this Bitcoin. It's pretty much no much different than a dollar. It's a promise. So the dollar right now has no gold reserve behind it. It's a promise of a government that it's a legal tender, that I will pay it to you, you will accept it. So same with Bitcoin. It's a thing that people buy and sell, and the market, to your point, determines its value. There's nothing behind it besides just that, which is, so that's why it's so volatile.
So I have a question, two, kind of. First, what are your thoughts on the US kind of just like, they don't really accept ICOs. ICOs are no longer even starting in the US at all because they're over-regulating everything, because the SEC just sent out, what was it, like 120 subpoenas to like 80 different companies, TechCrunch, all of them. And the second question is, what are your thoughts on Canada's stance, which is very accepting? They even just launched, the Ontario Securities Commission just launched the Launchpad initiative to basically help ICOs navigate the very, very difficult and just confusing world of, initial coin offerings. So
Yeah.
what are your thoughts on both of those?
Very good question. I'll repeat that, paraphrase,
Go
so
for it.
I'm not going to be verbatim about it. So the question is, what are the thoughts about the U.S. And ICOs in the U.S.? And U.S. stands on pretty much not prohibiting ICOs, but making them very, very difficult and serving a bunch of legal junk documents like subpoenas to those involved in that. And what's the opinion on Canada going a similar path?
The opposite.
The opposite.
Canada loves crypto. I mean, the CSIS just came out with the
I-
megatrends.
Okay, I will paraphrase the question. So, and what is the opinion on Canada going a different route than the US and going to clarify what ICOs means and what the cryptocurrencies are? So first part of the question is you asked, they're going to spook investors. So on the one hand, they're going to be very secure with their regulation, with subpoenas, with scaring away people. They're going to be very secure because ICOs will not be launched in the US. However, such other countries that are more welcoming to the ICOs and cryptocurrencies, such as some countries of the Caribbean, Estonia, Switzerland maybe, Malta definitely, would definitely woo these investors. And it doesn't matter if I open an ICO and create a DAO, which is a new thing with the blockchain and cryptocurrency, which is decentralized, autonomous organization, meaning I'm not registered in any country, it's autonomous, I have nothing to do with it, I just started it and it runs its own being, go find me. So I technically rent a server in Malta or what have you, run an ICO, and the same US investors that are prohibited to invest in ICOs, not even prohibited, but the SEO is prohibited to be launched in the US, I can woo the same US investors to invest in Malta just over the internet, and US will be limited to their action because, again, the US is a separate country. Their laws are supposed to apply only within the US borders. However, they try to overreach to different countries as well and manipulate that. But having said that, so the short answer is they're going to lose investors, and they're going to be very secure from ICO and the Ponzi scheme perspective. But at the same time, it's not going to prevent US customers or investors to invest in ICO from anywhere in the world. On the Canadian point, Canadian portion of your question, it goes different from your point of view than the US. In my mind, they are taking cautious approach to come closer to the US position as well. So what Canada is trying to do is not legislate, but identify and specify what cryptocurrency is, if it's a stock, if it's a currency, and how to regulate it, and if they should to regulate it. It's still in the works, so there's an opinion being created right now. There is an opinion. However, there is no legislation as we speak. In my opinion, Canada will end up where US is going. In your opinion, it will go in a different direction. We'll see, who knows. But my fear is that all one by one, the countries that deal extensively with the US, especially in the banking world, in the money transaction world, will have to follow suit of the US stance just because nobody wants to have their accounts blocked. It's like US banned for the banking purposes transactions, investments from Iran, and some transactions from Iran, just to give you an example. So any bank that wants to deal with US bank will have to monitor this and report any Iranian transactions going on in the banking world. If not, then you're not welcome to deal with US banks. And US is a big portion of the economy, so therefore, in my mind, at some point of time in the future, Canada and other countries will have to take a stance leaning towards US position just because they want to continue business with the States.